Hey guys, hope you're all well. Welcome to the next video. Of course, it's the third video on the channel so far. When actually looking back at the previous two videos, I mean, I've only been doing this for about a month and can't lie, it's been popping off recently. 11K on the second video. Feedback has been great as well. I mean, you guys have been giving in a lot of suggestions recently as well. I just did a poll on Instagram not too long ago. I think it was last week, just asking you guys, what you want to see, whether it's technical or fundamental. Quite a few of you mentioned market structure. So, when you look online on YouTube, there's a lot of videos about market structure, but some of the things that I realized aren't mentioned too much is the different types of market structure. So of course, we never want to complicate too much, but it's good to actually understand, when you're actually looking at the markets, let's just forget about fundamentals at the moment. Of course, that's one of the most important things in the market, but just from a technical stance, if your understanding of market structure is incorrect, then you're going to be looking for places to buy when you should actually be selling, for example. So, you know, just trying to keep a bit of clarification and all of that is it's going to be good. That's why I'm doing this video pretty much. So just got off a call on I did a public Zoom call at the moment. Oh, today. Was it just now? Yeah, literally just had it today. Was about an hour long, so might be doing a few of these public calls from time to time. So definitely sort of follow me on Instagram, Telegram, whatever it may be. But yeah, guys, let's just get straight into it. So when you're looking at market structure, let's just take this pair, AED CAD. This is one of the pairs that I was sort of explaining with some of the guys that were in the public call. But before we get into any of this, let me just quickly explain a few things. So with market structure, as you know, when you're seeing the market, it moves in waves, right? So you might get buying, selling, buying, selling, buying, selling. This is also known as a downtrend. When you have the opposite, of course, really basic, that's the uptrend. Now, the problem is with a lot of students, with a lot of people that are just getting into smart money concepts, they understand market structure, but it's understanding the more advanced side of it. What happens if, for example, this happens, where it literally just takes liquidity and you're unsure whether it's, some kind of breakup or something like that. Now, one of the key things to understand here is two things. You've got, let's just call it primary structure and secondary structure. So got two kind of things, primary and secondary structure. You can also say it's strong structure and weak structure, whatever it is. Let's just say we're in a downtrend. If this is on the higher time frame, what you can expect is this. Let's just zoom in, for example. In this leg down, what you're going to expect is this right here. You'll see selling, maybe a bit of consolidation, then more selling, then return back down. Then it keeps dropping down, and then that's when you get the buy up, whatever it may be. So let's just say that's the leg down that we see. And in all of this, you're going to have the internal structure. Now, some of this is, of course, going to be sort of primary structure, and then the other one's going to be secondary structure. Now, this is one of the key things that you need to understand. What's primary, what's secondary, and what happens when we get to these zones or these sort of points of interest. If price is manipulated around them points, are we still confirmed to be in the trend? Let's just, let me just redraw this, for example. So let me just draw it out clearly. So let's just say, for example, we've got this. It just buys up again. Okay. So we're at this point right now, for example. This is generally what price will look like. You're never going to have something in the market like, as simple as, or that, whatever it may be. Let me just get rid of this. So when you're looking at primary structure, it's the point that pretty much creates the swings towards the downside. So if you're in a downtrend, your primary structural point will be this point right here, because it eventually led to the move below this low right here. Then when you look at the weaker structure would be something like this. When you're looking at the weaker structure, so let's just say that's the primary structure. That's the new low. That would be the new high, for example. And then somewhere within this, you're going to have some kind of weak structure right there. This right here would be the primary structure, the new one, right there. One of these impulses down would be the weaker structure. So what that means is we've reached a point of interest right here below. It comes all the way down. Now, when you see this break of structure up, what that means is on the lower time frames, we're now in an uptrend. But again, you've got to look at the whole narrative of the market. You know, what's actually going on with the main structural points. Your primary structure still hasn't been broken. It still has not. So we're technically still in a downtrend. You have this tiny break of structure upwards. So we could, if we wanted to start looking for buys at certain points of interest upwards. However, these are going to be higher risk entries. The reason is because we've only broken sort of short-term structure or secondary structure. Now, when we actually break primary structure, so this point right here, and cleanly, by the way, it can't just be one of these. It cannot be something like this, because this is potentially what could happen. And this is what happens a lot. I'm going to try to find a few examples from my charts. What this also means is pretty much a move on the liquidity, or a take on the liquidity, what's also now known around the smart money concept industry as inducement. You know, price just induced that primary structure. So it could be, for example, just a wick. You know, at times, for example, you get something like this. Let me just reduce that. So you get what I mean. It might just be a little wick above this high. So technically, we could say that we are still in the downside structure. However, if the situation is different and we have something like this, and remember, it's primary structure. So on the higher time frames, it's going to be pretty much the main retracement before the leg down. So that the point that breaks this essentially. Now, if we've got something like this, for example, comes back down, cleanly breaks through, and then it comes to a point of interest of reversal, like there, for example. Now, what can we actually consider right here? We are changing the trend. We were in a downtrend. We were in a downtrend, moving that way. Now, because we've cleanly broken primary structure, we're on the way backwards, back up. One thing I'm always going to say to you guys, and even to my students as well, always sort of say this in the videos and everything, always keep fundamentals to understand what's actually going on, because although it's good to understand market structures, you know, to this level, your strong highs, your strong lows, your weak highs, your weak lows, primary structure, secondary structure, whatever it is, fundamentals is always sort of going to help you in the true understanding of the market. But anyways, besides from that, we need a clean break of structure. And that's when potentially we can start to look for buys. So we get to this area right here. If you really wanted to, again, and you are short on your trade, be looking for sells. Timing of day is important as well, and a few other confirmations. You might be only looking to meet some kind of liquidity void down here. So if we were starting to look for buys now, it would look something like this. This would be our first point of interest. And perhaps there would be one down there as well, because we have liquidity void right here. or an imbalance, as many people love to call it. Void right there. And of course, guys, if there's a few terms that you might not understand too clearly, I'd say look back at the first video, Ultimate Beginner's Guide. We talk through some of the key concepts that you need to understand, and then the 3 order blocks, that's just for entries pretty much. So now that's when we can start looking for buys. We've had a clean break above this. Now we're looking to buy. So let's go back to the charts. At the moment, this is what I was just discussing in the call. To have a clear understanding of market structure and what's actually happening. Let's look at what's been going on recently. So in terms of AED CAD, just to briefly explain fundamentals, the Bank of Canada, or BOC, they've been one of the most progressive monetary sort of central banks with tightening monetary policies, hence why AED CAD has been declining, much with all the sort of CAD pairs. You look at something like EuroCAD, again, massive downside movements throughout this year, especially since central banks started to release that information. Now, when we're talking about technicals, we're just looking for sells because of the structure. Remember what I just said right here. Let's actually recognize what we have. We've got, from the beginning, I'm going to use the little circles. We've got this as a primary high. We can call this primary low. Again, just going to copy and paste each one. This one is a bit of a different one because what actually happened was this. It created that liquidity to the downside. So we can still call that a low here, primary high. Now we've definitely got a primary low that completely broke this structure here. So you see what's happening. We've come to this this low right here, reacted of a higher time frame, point of interest here. That one is on the daily order block. If you look back on the charts, see what I just said right here. Look, now we're having a play on this liquidity over here of this primary high. So what a lot of people are going to say is this: if we do get this tiny break above, you've got to look at a few reasons. First of all, have we got equal highs? Yes, we have, right there, as you can see. So that's one of the reasons why potentially price can take this primary high, but induce it by a few pips, however many pips it may be. I'm just counting right now. It looks like about, what, 10 pips, 5 pips, something like that. So it might just induce that, for example, and then continue still to the downside. Of course, we've got areas that we can look for, like down here, for example, this liquidity void and imbalance that we'll be aiming for in the long term. Of course, a lot of what this chart has to do with is fundamental. So, if we do get to that stage, I'm going to read up on everything and just try and understand what's going on with the markets, just to get our directional bias. Are we still looking for AED CAD sells? So there's 2 things that can happen at the moment. And obviously this is live trading. Of course, we're not looking back. We're looking to see what can actually happen from now. There's a few options. We can either look for our points of interest to keep selling, as we've already interacted with our higher time frame point of interest right here. This one is on the 4-hour, clean candle, and then it just reacted pretty much just sort of on the entry of it. Now, what we've had recently is this buying pressure to the upside. So we've had things like, what do we call it again? A trend line liquidity, so something like this. When you really stretch it out again. Well, that's why I don't use trend line, to be honest. Just proves how useless they can be. Because they're so subjective. That's the problem with it. So you've got that liquidity. You've also got the equal lows that we were mainly talking about right here. Price eventually got to this higher time frame point of interest. What I was explaining was pretty much the market structure of this. Look, we can even explain it in Wyckoff terms. I'm going to create a video on that in the future, but we're printing up these highs. One high, again another high, price returns back to its original point of interest right there. or return to order block, mitigated. We always leave a little tick to show that it mitigated that area. Price boomed up all the way to a higher time frame point of interest, created this liquidity at the top. So in my mind, I still was not ready to sell because of this right here. I knew that eventually this could get induced. Then as price carried on, we created these equal lows. So we've got liquidity on both sides of the market. When that happens, you have to really assess, is it worth getting into this market when we've got liquidity on both sides? So at that time over here, I really wasn't looking for any trades. Then we got to our first point of interest right here. I waited for some kind of breakdown, but price kept on showing that upward momentum. Create some trendline liquidity right here. It was perfect to look to take later on. Then what price did was create an equal high again at the top. So this is still another problem in terms of technicals. We've come into a high time frame point of interest, which we could say is all the way up to here. All the way up to there. As we now break our structure, we've broken our secondary structure. So this right here, we can call that as our secondary one. So this is our primary. Primary there as well. Let's just call this one as well, this area. We'll leave that one there. So this is our low, this is our high. Our secondary structure is these points right here, these equal lows, which gives me extra confirmation that we were looking for sells. So as soon as we broke this short-term structure, we know that on the short term, we can look for sells. So I was personally looking for this area. It didn't come back up, just kept going back down. Then now we've seen this break of primary structure. The reason that one is primary again, why? Because I said, look, we've had this last high of primary structure. The new low was created after the break up. So that's exactly the reason why this one is a significant break of structure right there. Then another significant break, even this one right here, for example. And this one is the priority that I was looking at the time. You see what just happened? We had equal lows at the bottom. Price came back down to do what? To do exactly this, induce liquidity, or it purged liquidity on the downside, came back up, broke up. Now we seem to be consolidating. Personally, I'm not looking for any sales at the moment. This would be one of the worst times you can look for sales is after we've just taken liquidity like this. So I'm waiting for a higher time frame point of interest, like there on the 1 hour. Now, personally, like I said in the Zoom call that I just hosted today, I'm going to be looking for a confirmation sell. So I'm going to leave that for another video, but just a quick snapshot as to what we looked at, something like that. But still, let's not be surprised if price comes back up to take all of this, because we've got equal highs and we've got equal highs on the higher time frame. So if we have a little liquidity run on this structure right here into that point of interest, again, we can still start looking for sells, of course, depending on fundamentals as well. So yeah, when you're looking at market structure like this, there's so many components that you need to understand. Again, just the general dynamic of the trend. So when you're looking at something like that, understanding your primary points, like these. Secondly, how price reacts to these primary points. So are we actually having a clean breakthrough? So a clean breakthrough would be a nice, maybe daily order block body, just completely smashing through it. Or are we going to get a tiny play on liquidity or an inducement just to take that liquidity, but still continue to the downside? Because that is exactly what we call a complex pullback. Complex pullback is just simply price keeps printing these lows, and then it pulls back up above this primary structure just to take liquidity and to come back down. So potentially, that's what we could be seeing on this. Of course, I'm going to be observing, what goes on around these areas on the lower time frames. If I do see something good, then I'll just send it into my group and we'll just go from there. Of course, when I'm just on Telegram, so whenever I've got something like any entries or anything, just send them in and then put the limits on and all that. So yeah, if you guys have any questions about anything that I've just talked about in this lesson, of course, just either put it in the comments or just message me on Instagram. All information about trading channel and the course, mentorship, everything is there. But yeah, guys, please just go like and subscribe, comment on the videos. I appreciate any feedback. And yeah, anyways, see you in the next video. Take care.